Australia's housing affordability has officially collapsed. It is far worse than most people ever imagined it would be. And the most brutal reality is this is our government's own doing. They went out of their way to sabotage the property market with bad policy decisions and years of pretending like they wanted to fix it when they never intended to fix it at all. In fact, I'm pretty sure they knew deep down it was unfixable with the policies they put in place. And now this is all out in the open. Hey guys, Scott here. Now, over the last few days, every major data house in property has dropped bomb after bomb. Domain, Cotality, PropTrack, Ray White, KPMG, even independent surveys floating around are saying the same thing. These are brutal predictions, shocking revelations, statistical insights that will make you want to march to Canberra and demand answers. And honestly, I feel like we should print these reports out, stack them up, and shove them right under the government's nose and ask them, what the hell are you guys thinking? Because everyday Aussies are forced to sit there and digest these numbers to understand what is really happening to their future, while the people running the country seem to just turn a blind eye. This economic situation is not what Aussies signed up for. The housing crisis is not something we should accept and quietly move on from, especially when it keeps getting worse. And this is what really messes with my head. On paper, everything lately should have cooled the property market down. We have had rate hikes. The RBA might even hike again in May if inflation does not cool. Households are under mortgage stress. People have tapped out because they simply cannot afford to buy a house. In a normal country and a free market, that will slow prices down. I mean, look at other countries. New Zealand's property market boomed and then corrected. So did Canada's. The UK and the US also cooled. Every major country saw prices surge after borders reopened, and in fact, many of them are actually cutting their rates right now. This happened for everyone except us. So you start asking yourself, why? Well, I'm going to tell you why. Because we live in a country where the government has made it its personal mission to destroy the housing market and sabotage the financial future of the very people who voted for them. So if you go through the policies, if you watch the parliamentary hearings and look at the decisions they have been making lately, it starts to feel less like incompetence and more like a deliberately manufactured crisis. So in this video, I'm going to do exactly that. I'm going to rip open the government's housing policies. I'm going to walk you through the latest numbers and revelations from these major research houses, and I'm going to break them down in plain English so it's not boring and not complicated. I'm going to show you exactly where the government went wrong. And if you stay until the end, I will tell you how to position yourself so you are not the one paying for this mess forever and how you can actually get out of it. In fact, how many people who are in the right position can actually profit from what's going to happen in the next 10 years. Trust me, if I manage to navigate this system, secure my financial future, you can too. I post property and the economy updates every single day, so hit subscribe and hit the bell icon so you do not miss what's coming next. You need the information, you need to stay up to date. Let's get into it. Cotality's latest data shows national rents have surged 44% over the 5 years to September 2025, while wages have only risen by just 17.5% in the same period. In clear terms, rents are increasing nearly 3 times faster than your pay. What does that mean in plain language? It means renters are now spending a whopping 33.4% of their pre-tax income just to keep a roof over their head. We have never seen rental affordability deteriorate at this pace before. And if you think this is evenly spread across the country, it is not. WA has it the worst. Rents there have risen 66% over 5 years, while wages have climbed only 18.5%. That gap is absolutely crazy. Now, this is where it gets a little weird because this part actually defies normal market behavior. Vacancy rates have ticked up to 1.5%, which is the highest level we have seen since early 2022. In a normal market, when vacancy rises, rents cool off. But this is an anomaly. Even with vacancy rates rising, rents are still climbing. The REA has already warned that rental growth is likely to keep pushing higher in 2026 because we are still operating in a supply-constrained market. We do not have enough supply. So as long as supply remains tight, it does not matter if vacancy edges up slightly, rents will continue rising. Now, naturally, if rent is chewing through your income, the next thought is simple. You think, fine, I will just buy. I agree, that seems like a valid approach, until you look at what it actually takes to own a home in Australia today. And there are barriers for renters to move into home ownership, and that is why the portion of renters is increasing, why rents are increasing, and this is why landlords are benefiting from this. Domain's latest figures show that an average income couple can no longer afford an entry-level house in any Australian capital city. None. Let me give you some context. 5 years ago, Sydney was the only outlier. Sydney was unaffordable. Everywhere else was affordable. Sydney has always been absurdly expensive. It has been second only to Hong Kong globally, so in a twisted way, that made sense. But now, every capital city is too unaffordable for everyday Aussies. Even for the people who did manage to get into the property market by some miracle, the majority of them are living in mortgage stress. I'm talking about the people who got in, in the last few years. They are no better than the stressed renters. A Sydney couple aged 25 to 34 earning the median income would need to commit 62% of their income to service an entry-level home. 5 years ago, it was just 31%. How is that possible? Nationally, Cotality shows the dwelling value to income ratio has climbed to 8.2 compared to the 20-year average of 6.8. It means the median dwelling now costs 8.2 times your annual pre-tax income. On top of that, it now takes 11 years to save a standard 20% deposit, and roughly 45% of gross households' income is required to service a new mortgage. That is the reality you and every other Aussie are dealing with. So as expensive as it is to rent, it is actually more expensive to own, and there are barriers to ownership. All right, now you might be thinking, Scott, if people are struggling to rent and struggling to buy, that clearly means a correction to the property market is long overdue and demand should slow down. I wish that was true. The numbers say it is not. Demand is not disappearing, it is actually getting redirected. Now, Ray White did some analysis here, and I want to share some of their highlights with what is happening beneath the surface. Sales of houses under 750K have fallen sharply over the past decade. Meanwhile, apartment sales under 750K have increased. What does that tell you? It tells you that people are shifting from detached houses to units because detached houses have moved completely out of reach. They cannot buy them. They cannot service the mortgage on them. In fact, they can't even afford to rent them. So instead of abandoning the market entirely, people are moving to apartments. This is not the only shift which is happening. First-time buyers who are locked out of capital cities are now looking at outer suburbs and fringe areas where homes still look affordable. So like I said, demand has redirected. And that redirection has created another outcome that many did not expect. Entry-level homes are now rising faster than ever because demand is heavily concentrated in that segment. Nationally, entry-level homes jumped from 408K to 685K between 2020 and 2025. That is a 68% jump. Soon enough, what we call affordable today at 700K will start creeping towards 950K or even $1 million because everyone is chasing that bracket to avoid mortgage stress in capital city core areas. So what the unaffordability crisis is doing is forcing people to stretch, adjust, compromise, and lower expectations and change expectations. That is the adaptation we are seeing. And for property investors, you need to understand these trends so you can strategically position your investments. Now let's get to the part that the government does not want you looking at. This is the part that actually decides home prices the most. This is housing supply. Now, KPMG's analysis shows that 1 in 4 new homes coming to the market now costs at least $1 million. The number of homes starting at 2 million has doubled in just 2 years. Meanwhile, approvals for homes valued between 500K and 600K have absolutely collapsed. That is the affordable pipeline being wiped out. This is because construction costs have risen roughly 40% since 2020 because materials, labor, and supply chain pressures have exploded. Now, let me explain why this is happening and why 1 million homes now dominate new supply. The government has actively blocked new land releases in many areas. It has failed to lay infrastructure in new greenfield corridors fast enough. It has restricted zoning in key locations. It has charged developers massive infrastructure contributions in new estates, which feed into the cost of those new properties. Now, developers are not charities. they pass those infrastructure costs directly onto buyers, increasing the price. So when land prices rise because supply is artificially constrained, and when builders must absorb higher material costs, and when they are forced to pay for roads, utilities, and services themselves, all those hidden costs get embedded into the final home price. The same home that used to cost $600K now costs $1 million to build because of those compounded policy failures, and also because of the price inflation of all of the raw materials, the labor, the energy, and in addition to that, all of these infrastructure charges and taxes on a property. So that is the big issue on the supply side. All new supply coming to the market is going to be a lot more expensive than what it was in the past. Now let's talk demand. I want to tell the government this: if you refuse to bring migration back to sustainable levels, fine. That is one choice. But then why would you add even more demand into an already overheated market? Now, the 5% deposit scheme pulled future demand forward. Caps were loosened. It was not efficiently targeted. The same incentive could apply to someone earning $400K as to someone earning $90K. Stamp duty concessions were not tightly targeted. So what happened? Well, the bank of mum and dad, first-time buyers, downsizers, investors, every demographic hit the market, and we had record levels of first-time buyers. And in parliamentary hearings, when the government was questioned about modelling behind the 5% scheme, the government officially said, "We don't worry about supply." How the hell can you put together a policy without thinking about supply? Madness. Any first-year economics student understands house prices are driven by demand and supply. If you stimulate demand, you must expand supply. In Senate hearings, when asked about supply, the answers were vague at best.
Can you please now advise how many houses have been completed?
28,000 are in planning and construction, 18,000 of those through the HAF.
No, just so you, in case you didn't hear, it's about the number of houses completed.
8,000 social and affordable homes are in planning and construction.
The question is, how many houses have been completed, Minister Wong? That's the question.
Well, Senator, I have in front of me the
Now, if that wasn't enough, now the federal government has openly admitted it will fall short of the 1.2 million homes target. They have basically said it is not going to happen. They continue to float changes to capital gains tax and tax settings while ignoring the very economist warning that these changes, if they're poorly designed, could actually further raise rents. At this point, it generally feels like they do not care, or they're just plain stupid. And Aussies are not stupid. We see it, we know what's going on. So here is the real question. What do you do in the middle of all of this mess? Personally for you, what choices do you make? Now, if you were a first-time buyer, here is the uncomfortable reality. Rising prices in a supply-constrained market usually mean one thing: prices keep rising until supply meaningfully improves. And right now, supply will not improve for 5 to 7 years minimum. If you cannot buy where you live, you may need to consider alternatives. That might mean rent vesting, renting where you want to live and investing in another part of the country. That might mean buying in a different state, or partnering with family or friends, or compromising on location or even property type. If you're looking at houses and land, think about apartments. Waiting for a crash that data does not support, that is not a strategy. Now, if you are looking to buy, stop chasing perfection. Focus on entry, get on the ladder. The longer you wait in a structurally undersupplied market, the further the ladder will move on you. Now, if you are an investor, understand something very clearly. Investors are not the villain in a supply crisis. New supply absolutely matters. If you can fund or support new housing stock, you are part of the solution. New builds come with tax advantages, depreciation benefits, and in a constrained rental market, strong rental demand and higher rents and way less maintenance, and you will be helping the community and society. You cannot control government policy, but you can control whether you own assets in a country that keeps inflating them. Now, if this crisis continues, which it will, and the data suggests it will keep going on and on and on, asset owners will be positioned very differently from non-owners. This is your decision to make. Look, I know this video was very heavy, but ignoring this does not make it disappear. The data is clear. The affordability crisis, it is not random. And unless policy settings change dramatically, the pressure will remain. Now, you can stay angry or you can stay informed and position yourself accordingly. If you found this breakdown useful, hit subscribe so you never miss one of these videos. Also hit the bell icon so that you can stay informed, because I will keep exposing what the data actually says. And when things change, policy change, the market change, I will let you know that day. This is your daily property update, your update every single day on property, the economy, on policy settings, everything you need to be a property insider. I'd love to see your thoughts, your opinions, what you're seeing on the ground. Leave a comment. I generally read every single one. And we just hit 50,000 subscribers. I appreciate you for helping me to achieve that milestone. See you at the next video.